Hello everyone and welcome to today's edition. Um, I didn't really do much today. I'm actually working on, because of the last few days not having that great of success with what I've been trying. I'm working on making a few changes and maybe implementing a few different strategies or indicators with it. This is my This is Facebook. I changed my EMAs to 6 and 16 from 3 and 10. The 3 was just a little bit too tight of an EMA, just too much movement, and I also added a shaded area in the show. When it's green, that means the 6 is above the 16. When it's red, the 6 is below the 16. I got this from another place. I'm not going to name it, but another trading service uses this, so I kind of stole it from there. So I have VWAP here, and I kind of put that in. And this one here is called the reverse engineering RSI. And it's based on the 50. It's a 50 moving average of the RSI. So basically, if price is above this, it's bullish. If it's below it, it's bearish. And then right here I have the 100 EMA and the 200 EMA. So those are the indicators I'm using right now, or not indicators, but trend lines. Not even trend, moving averages. So I haven't touched anything down here other than the cross. These spikes now coincide with the 616 cross rather than the 310 cross. So let's take a look at some stuff. Facebook, we started out, we opened with a bullish engulfing candle and then a pullback. I think in the future I may wait till a pullback of about 50% of the candle if it's a large candle like this. Maybe even 50% of the candle, no matter how big the candle is on a bullish engulfing. Just because I've been entering when it's up here, and when it gets down to here, it's too far of a stop out. Like I took about a 25% loss the other day because my stop out was so far away from my entry. Where if I would have waited to about here, even if I stop out, it's not going to be as big of a hit. So I think I'm going to make that change, and if it doesn't pull back, then I just don't get in. I just miss the trade. As a wise trader once said to me and to a whole group I was in, it's better to not be in a trade wishing you were than to be in a trade wishing you weren't. So I'd rather miss the trade than to get in and have it pull back and have a 25% loss again. So here we had a bearish engulfing candle, and it came down to this RSI, this reverse engineering RSI, which is in thinkorswim. I don't know if other platforms have this or not, but it's in thinkorswim by default. It's called reverse engineering RSI. I left the default setting with 50. You can see here, this is the default settings. All I did was made the line a little bit wider. I made it a 2 and I made it purple. Other than that, I didn't change anything here. So the general rule is if the price is above this line, it's bullish. If it's below it, it's bearish. I'm going to play around and see how it works out. Also, I changed this to a 3-minute chart. Actually, I didn't. I was supposed to have. So it's supposed to be a 3-minute chart. Okay, let's start that again. This one over here is a 5-minute. I keep my 5-minute because I have these indicators set for 5-minute charts. Not really set for them, but that's what I've been studying on them. And maybe I'll find out the 3-minute are better. Here we have a bearish engulfing, and that you probably could have got maybe 10% on that, but if you wait till price comes back to the 50% retracement, we'll call it. It's not really retracement because it's not a Fibonacci per se, because we're not, Fibonacci, we'd be playing it from here to here. I don't know that you can do Fibonacci from here to here with only 2 candles. I don't know the uh, intricacies of Fibonacci, so I don't know if you can only use 2 candles to do Fibonacci. But either way, if you waited till 50% pullback of this candle, you wouldn't have got that till here. And that probably would have worked out, actually, because you would have got in right here when it hit about that 50%. If you would have got in right about this candle, you would have got to ride this all the way down, which would have got you, I'm sure, at least 10%. And here we're after 11 o'clock, so let's go to Netflix. Well, let's go back to Facebook again, because we'll look at the 5-minute chart and see how I got rid of the 10-minute chart. Here, bullish or bearish engulfing would not have worked. Bullish engulfing here. If you would have waited for the 50% retracement, that would have been, and I look at the body of the candle, not the wicks or tails when I say 50%. So you would have got in about here, and that would have worked out. So you would have got in here, you would have, pulled down to here, would have been a little bit of a pullback, but you would have been negative a little bit, not a whole lot, and it would have worked out here. So if you would have played that at the open and the 50% pullback, that would have worked out for you. Bearish engulfing here wouldn't have worked out too well, and a bearish engulfing here would have worked out. So you see this, it held the 100 EMA pretty consistently on the 3-minute chart. Let's go over to Netflix. 3-minute and 5-minute. Trying to keep the 5-minute pretty clean and simple. Not put too many indicators on it. But we had a bullish engulfing here. If you would have waited for retracement, would have been about here. Wouldn't have worked out, at least not yet. You'd probably still be in the trade. Theta would have really taken a toll, but it might have worked. If you would have got in here, I don't know if you could have got 10% on this or not. Depends on which contracts you went in, what expiration, which strike. Another bullish engulfing here that so far would not have worked. Actually would have stopped you out, because you would have stopped out. This candle here would have been a technical stop out, so that would have stopped you out. Alibaba. Bearish engulfing before the open. And again, I've said before, that's really risky. Bearish engulfing here, this would have worked out, but if you would have waited for 50% retracement, you wouldn't have got into over here, and I wouldn't get in this long after. When I say 50% retracement of a candle, it has to be in 2 to 3 candles. If it's 5 candles later, then as far as I'm concerned, that play's dead. Had a bullish engulfing candle here. This one would have worked out because your stop out, your technical stop out, would have been here. So you would have been in it all through here and rode it up to pretty close to today's high, this morning's high. So you would have got pretty close to that. I'm sure I would have sold at least some of it along the way, probably most of it. So that's how I would have played that one on the 5-minute. On the 3-minute, you see we had a 616 cross down here. Would have been a nice ride down. I would have played it down to about this line. Maybe here for the lows over here. So I would have probably sold a couple pieces here, and the rest, not the rest, but most of what I had left at this low here. Maybe held on to 1 or 2 contracts to see if we've got any lower. Don't know, would have made money either way. These crosses shouldn't be played alone. you need other indicators to go along with that. The reason I don't like playing just a cross by itself, because you see where the cross happened here. We were already, I don't know, 5 candles into this downtrend before we got to cross. I don't like how much they lag. Sometimes they don't lag much at all, like this one here. This cross happened pretty close to the bottom. So sometimes they'll work out, but I prefer to trade on candlesticks and price action rather than crosses. But this is something that can be used. You can look at a chart and say, okay, the 6 is above the 16, so I don't want to play puts. Again, this is something it's new to me. I just started messing around with it today, so we're gonna see how it works out. I'm gonna experiment with it, paper trade with it. Look at the shop. 3-minute chart on shop. Came down to this RSI. Bullish engulfing off the RSI. And pretty much ran up from there for the rest of the day. On the 5-minute chart, bearish engulfing here, wouldn't have worked. Bullish engulfing here, that would have worked out. And we're past 11 o'clock there. Baidu. And I know this isn't that great of a video because there's not no trades in it. I'm just kind of thinking out loud when I'm telling you this, when I'm narrating this. Thinking out loud about how I'm gonna play this or what I'm gonna look at. You see here we had a bearish engulfing candle right up to this red cloud, and anybody that's traded Ichimoku cloud, that's not what this is. I've traded Ichimoku cloud before. I traded options on it for probably about 6 months. I just found that it works. The Ichimoku cloud seems to work better for trending days, and not for if there's any kind of any type of a flat day without a lot of price action. The Ichimoku cloud just doesn't work, and we went through a spell where there was we didn't have a lot of runs where the price went one direction for most of the day, and it was really hard to trade on the cloud, on the Ichimoku cloud, using the Ichimoku cloud in those conditions. So I kind of got away from it. It still works great in certain conditions, but I don't know that. This morning when I woke up, I didn't know if today was going to be a trending day where it ran all day. So you don't know when you can use it till the day's over, and by then it's too late. So but that's not what this is. All this is it shades the area in between the 6 and 16 moving average, or whatever moving average you want to use. You can come in here and change these numbers, and it'll change it accordingly here to whatever you want it to be. That's up here. Studies. Like I said, I got it from another service, so I'm not going to share the code. But if you can figure out how to write this yourself, it's all it does is you can do this without shading it in. It just makes it a little bit easier to recognize when it's shaded in. Plus, I had a lot of lines. When you have this many lines on here, now you have 2 more lines. And with it shaded, it kind of hides the lines, so it makes it seem a little bit less busy. So yeah, we had a bullish or bearish engulfing here right off of the 100 EMA would have been a really nice trade, and it was in the red cloud. It didn't break it. You could have played it down to, you know, my first target would probably have been right about here because of this low. Would have sold some here, and at that point I would have moved my stop to break even, played it down, and I'd have to go back and look, you know, look at the previous day, see if there's any kind of congestion or anything from the previous day that would have been a nice, or maybe a different time frame that would have been in somewhere that I could have sold more. So either way, you just want to sell some along the way, and that's another thing. If you pay a base fee plus commissions, get a hold of your broker and get that base fee waived. If you are active enough of a trader, I know TD Ameritrade, they didn't give me any hassle at all about dropping my base fee. I only pay per contract, so it doesn't matter if I buy 5 contracts and sell them, you know, sell all 5 at once, or if I sell one at a time 5 times. I pay the same amount, and that made a big difference. Now I can sell, for instance, I can sell half of it here and let the rest ride, and it won't cost me any more money. I'm sure, you know, it's probably not a secret that just about anybody with just a phone call can get their base fee rate lowered to $4.95. I think it's $6.95 by default. Just a phone call, you can get them to drop it to $4.95. But even if I was paying $4.95, I would have paid $4.95 plus commissions to get in, then a $4.95 plus commission to sell here, and if I sold more here, another $4.95 here, another $4.95 here, another $4.95 here. Now I'm spending $30, $35 in fees. Where without that $4.95, I don't pay that $4.95. I just pay per contract. So if I sold some here, sold some here, sold some here, sold some here, it costs the same whether I did that or if I sold them all right here. So if you're paying a base fee, call your broker. If they're not willing to work with you, and if you're not an active trader, you only make a couple trades a week or a couple trades a month, they might not do that for you. But if you're an active trader, tell them you want it lowered or eliminated. Tell them you don't want to pay that base fee. I do pay I pay the $4.95 if I buy stocks, because there is no commission per contract for stocks. So I still have the $4.95 for stocks. I don't trade stocks, so I don't really care if it's $4.95 or $14.95. So, but they're not going to waive it for stocks. And if they tell you they can't do it, like I got mine waived. It took a couple days. I called TD Ameritrade. I requested it, and the guy says, well, I can do this for you right now, but to do any more than that, I have to get approval. So he submitted a request, a ticket, whatever he called it, and it was like, I think 2 days later, I got an email saying that they took care of it. So I was trying to get a little bit lower commissions than what I pay. They didn't drop them down as low as I asked for, but I was happy to get rid of the fees. So, I'm happy with that. But, if you're with another broker and they refuse to do it, maybe go look for another broker. But that makes a big difference. So anyway, let's move on from that. Tesla. Tesla. So here's a 5-minute chart. We had a bearish engulfing here. You would have actually got a technical stop out on it because it closed above the bearish engulfing form here. The two makes up the pair. So you would have stopped out of this one. That wouldn't have worked out for you. And that was about it on the 5-minute. Let's take a look at the 3-minute. No signals on the 3-minute, but if you would have traded on this cross, and that's probably not too bad of an entry because you're not too far away from the highs. Your stop out probably would have been close above the highs here, we'll call it 272. Your entry would have been about 270.75, so about $1.25, and that's in a lot of stocks. $1.75 is a lot, but for Tesla, $1.75 is not that big of a move. So you could have put a stop up here, entered here, maybe waited till it broke below. It broke below this RSI number here in the VWAP, but it was still green, green here. So you could have maybe waited here. Maybe this looks like it might have been maybe a good one to get in. Maybe probably would have been better to wait about here because we broke below this low. So break below this low would have been this candle. So this probably would have been the best place to enter this trade, and wrote it down. I probably would have got out, if I wasn't out by now, I probably would have got out most of it right here when we had a bullish engulfing candle. Probably would have lowered my stop to maybe right here, this RSI number. Put my stop here, maybe just kept this as my stop and followed it down. And if you would have stuck with that, you would have stopped out right about here. So you could have rode this down to 268 from, what did I say, enter about here, from 270, a little over 270 to a little over 268. So you could have had a $2 fall there, and that would have been a pretty nice win. Take a look at Square. Okay, so Square on the 5-minute chart, we had a bearish engulfing candle. I don't know why I keep mixing those two up. It's not like I haven't been doing this long enough to know the difference, but bearish engulfing candle here. Stop out, technical stop out would have been a close above the top of this pair, this candle here that made up the pair. Would have definitely had a nice, I would have probably looked at lightening up, selling a few here after this. This isn't a hammer candle, but it's a long tail. So I probably would have looked at maybe right here, selling a couple, at least half of my contracts. And at that point, I'd probably would have lowered my stop. I don't know, maybe to about here. So you might have stopped out here, might not. It depends on how aggressive you are. But either way, that would have been a nice win. Looking over here on the 3-minute chart, here we had bearish engulfing below all these moving average lines, and we had this red cloud. That would have been a nice entry. Could have wrote it down. I like to sell some at 10% because, and I think what I would have done here is I would have sold, if I had 10% at this point here, I would have sold some because of this. And at that point, I would have lowered my stop to break even. And at this point, maybe wrote it down to here. You really don't know how low it's going to go, but I'd say I would have stopped out at this point. This probably would have stopped me out once I saw this candle. Even though you could have stayed in it longer, I just know my trading, I would probably have stopped out after this candle, whatever was left. And that's it for my watch list. Let's take a look at SPY. I haven't changed my SPY chart yet. So right here we had a bearish engulfing candle. Came down. This would have worked out because your stop would have been up here. So this would have worked out. You could have wrote it down. I probably would have sold, looking for a target here. Sold most of it. Might have even sold all of it because we had the 200 or 100 100 SMA coming up right here too. So I might have sold all of it, maybe kept one contract, but either way, I would have been out most likely at this level. And we kind of bounced from there. So that's kind of it for today. Like I said, I mean, I'm sure all my videos are pretty boring anyway, but this one I know is probably especially boring because I just didn't want to leave leave you guys hanging with not putting a video up with no explanation or why. So just to say that, because things didn't quite go as good as I hoped towards the end of this week. The beginning of the week was good, but the end of the week, it just didn't work out. So I want to try a few different things and add a few things in. So that's kind of what I'm working on. I made a couple paper trades today. They didn't work out, but it's experimenting, and you always try to get better. I think the system I was using was working pretty good, and I probably could have tweaked it just a little bit to make it just a little bit better, but I'm trying to get a little bit more, trying to get a little bit more consistent, and try to let my winners run a little longer. I know I tend to, people say you can't go broke selling too soon. Well, maybe that's true, but it doesn't help when you sell a 7% winner 2 days in a row, and then you have a 20% loser on the third day. So I'm trying to make, and that's what was happening when I'd enter on, let's say this candle here, let's say this was a bearish engulfing candle, I enter here, stop out up here, and I'm taking a 20% loss. So I'm trying to work that out to where hopefully I can start getting a little bit bigger wins. I tend to sell too soon to lock in some profit, but I'm also trying to get this system up to where I can have the confidence to go in with more contracts. I've only been going in with about 2 contracts, so I don't have a lot of flexibility on scaling out. If I get a little bit more confident in it, and I go in with, say, 4, 5, 6 contracts, maybe even 10 contracts, I can sell 5 contracts or 3 contracts at 10% win, and move my stop to break even, and sell 2 more contracts when I get to, I don't know, a certain level. And but when you only have 2 contracts, it's harder to do that. So I'm just trying to get a little bit more consistent and confident in this, and maybe to the point where I do go in bigger and I have more flexibility of scaling out, so, or even scaling in. So that's it for today. Like I said, I probably wouldn't have even done a video today, but I didn't want to just not do one and no reason or explanation why. And I know there's only a few people that watch these anyway, but I don't want to just leave people hanging. So anyway, that's it for today. See you guys on Monday. I'm going to do some work on the weekend on this, and probably all next week work on tweaking it some more and paper trading it. We'll go from there. And I'll try to get some live. There'll be paper trades probably, but I'll try to get some live ones in next week, and we'll see how it works. All right, later. Bye.